At last year's G20 meeting in Brisbane, Treasurer Joe Hockey warned he would crack down on multinational companies who tried to avoid paying taxes. Now the Financial Review is reporting the federal government will use the forthcoming budget to roll out a so-called Google tax, which will target profit-shifting tactics used by large multinationals. The Treasurer says he's determined to go after what he has described as tax thieves, and he's been consulting with the British government, whose diverted profits tax actually comes in today. Now, Tom, strong language from the Treasurer there, talking about tax thieves. Will the thieves be able to be brought to justice?
Well, look, it's very hard to say. As you point out, the law has just come into effect today, so we don't know how it's going to work in the UK. From what I'm told, the legislation is incredibly complicated and dense, and everyone's totally confused about how it's actually going to operate. The other dilemma with this is that this is a multinational problem. You know, it spans all countries, and if countries act unilaterally, it just allows companies to leave that country that's acting unilaterally and go somewhere else. The best way to address this problem is to have international action. Now, the OECD does have a program underway to address this issue, and I wonder if this is going to help or hinder it. I mean, I think the other interesting point from a political level, I think, is that that the way the coalition has really sort of grasped onto what you would call almost left-wing issues, you know, multinational tax avoidance, wealthy superannuants they're now hitting. It's quite a contrast from that first budget. I mean, they've obviously learned some political lessons.
Now, Chris, you wrote you co-wrote a paper that was submitted to the Senate's inquiry into corporate tax avoidance. Do you think this problem is overstated?
Yeah, it's a massively overstated problem, and the problem that we're referring to is what they call the base erosion and profit shifting problem. Now, the estimates of profit shifting have actually been declining over the last decade or two, how much money is being shifted across jurisdictions, and there's really no evidence that the base is being eroded, so the corporate tax base is being eroded. But I think there's a lot to unpack about Joe Hockey's claims. I particularly think the most offensive part is the claim that these are tax thieves. Now, if somebody is breaking the law, if any corporation is breaking the law, if any individual is breaking the law and not paying the tax that they are due, then obviously that is unlawful and they would be seen as thieving from the Treasury. But that's not at all what we're talking about here. We're talking about firms and individuals who obey the letter of the law, and the government thinks that they are paying less tax than the government would like. But nobody's stealing here. They're just obeying the letter of the law. So the idea that minimising, absolutely. But you and I minimise every time we put in exemptions into our income tax, and we write off various assets. That's what people do when they pay their tax. They minimise the burden to themselves. The idea that we are stealing from the government, that we are thieves just by doing so, I think is extraordinary.
All right, Chris, so just to get back to your point about the problem being overstated, there was, of course, that massive leak of documents from PricewaterhouseCoopers at the end of last year that showed 343 multinationals were avoiding tax by going through Luxembourg, and they were paying virtually zero tax. I mean, is the problem really overstated when you're seeing such large mass tax avoidance like that?
Yes, the problem is absolutely overstated. The Luxembourg tax schemes are very complicated, and they involve a bunch of basically shifting assets over time. But we have to look at this at a global level. We have to look at this at the level of the Australian corporate tax system as well. And the evidence suggests that there's much less profit shifting than the political class would suggest happens. It's much lower than when we first started talking about this, when the OECD first started talking about this in the mid-1990s. It's been steadily ratcheted down by all the reputable studies, and I think this is a massively overstated problem. But Chris, the problem is...
Chris, even if you think it's overstated, it does have an impact at a local level. If we take, for example, Amazon, that report showed that Amazon in a lot of cases was paying less than 1% tax, but if you've got a bookseller in Australia paying 30% tax, that's really going to have an impact on a small business. It's not a situation where there is a level playing field for small business?
Well, in certain circumstances, and I can't speak on Amazon's tax situation, but of course Amazon famously doesn't earn a profit, so it's not going to pay as much tax as a company that is. I mean, we've got a lot of deep complexities with the corporate tax system. The problem is when we debate these things, we debate them on a sort of emotional level, and you hear, oh, this is only 1% tax. We're not talking very seriously about the way the tax system is structured. We're just talking about anecdotal reports about companies we all know, Amazon, Google, whatever.